Okay, so think about what we're seeing here. We have two down closed candles here, trading into a fair value gap, trading back up into consequent encroachment. Remember the 38.75 level, which was midpoint between the old new week opening high and old week new good grief, old new week opening gap low. Half of that is consequent encroachment, so it's like the midpoint. So we would like to see it accumulate here because we already tapped into the high of the down closed candles here. That's an order block. We also have consequent encroachment. We want to see it perform where it wants to drive up to the high of 41.40 and a half and then attack the buy side here. If it can get to that high, we want to see speed and distance to do what? Run for the orders over here. Why would we want to see it deliver like that? Why would we want to see speed and distance once it trades to here? Because anyone that has a stop loss here would want to do what? Collapse the trade and not let their orders be there when the market reprices to it. So we want to see it try to gravitate up into that. And as soon as it gets there, we want to see an expansion, reach above here. And look what's resting right over here. Okay, so in present market conditions and structure, we don't want to see price trade below the low at 41.37. That's the new week opening gap. It's an old one, but nonetheless, it's still there. We want to see if it can go down there. We don't want to see it give up that level. It's better for it to leave the difference between this candle's high, right here, this candle's high, and this candle's low. We want to see that range between the new week opening gap low and this low of this candle. We want to see that remain open. That would act as a breakaway gap. So we're kind of forecasting not only a direction, but we're also trying to forecast a behavior in price. So we want to see this area stay open. It can go down there. It just means it's not likely really to be all that animated to the upside if it does so, because it's in that consolidation pattern. Whereas I'm expecting, because we're going into the noon hour in about 6 minutes or so, it will likely trade up into the buy side here. If it can do so, we want to see it become animated, have a big range or a couple ranges that go up into the 41, 42 and 3/4 level, and then up into potentially up into 41, 45. Now, you're all spoiled with the volatility. There's your run on buy side, so that's been taken. So when you're watching price action live like this and you're tape reading, you want to keep your annotations on, but just lighten them up to here. Now let me take you back into what I was saying when we were right here. I want to see it come back a little bit. It can go down into this range. We don't want to see it go down below the 41.37 level. So there's a limit, okay? I want to see price go down below this low, but I do not want to see it go down to this low and lower. It can go to that low, but it's better if it doesn't. Why did I say that? I said that if it stays open partially here, it would act as a breakaway gap, allowing for, even against a higher run in dollar, even against lower moves in euro, dollar, and cable, ICT, I'm not a forex trader. It doesn't matter. We're measuring risk on, risk off. The movement in here, below that low, inside of this area here. So what I was really framing was what? The fair value gap limited and framed on the basis of the new week opening gap low of 41.37 and this low right here. See that? Now, if you don't have my new week opening gap concept, if you're not interested in it, if you're not looking for it, if you don't have it on your chart, if you're not aware of it, you won't have this context. You'll just see that imbalance. And you might look at this opening on this candle here and draw it out and think, okay, if it touches there, I'll buy that as an order block. When in reality, what you should be seeing is it can trade down there, but we are waiting for something to unfold that leaves a portion of this entire range open, but framed on what basis? This new week opening gap low. And what else is existing? We have a wick. So watch what happens. 41.38 even. The low on this candle comes in at 41.37 and 3/4. That means to get that book of 41.38, it's got to go one tick below it. The difference between the bid and the ask. The reaction off that wick, and here's your fair value gap using the context of the new week opening gap low, which is this here. Okay, we're trading down, falls just short of by one tick. Consequent encroachment of the wick here, leaving this portion open, acts as what? Breakaway gap, fueling it to run to buy side. What's the context? The context is we are in a time of day where the algorithm changes its delivery. What is it going to do? It's going to move on traders that have open positions that have made money in the morning. Where's their stops? Boom. If there was no algorithm, these things would not happen. They wouldn't happen just like I outlined it. They wouldn't perform this way. They wouldn't be this way. They wouldn't march to the step that I gave it. Don't listen to these people that say there is no algorithm.